I'd like to take a moment to introduce Frank Abate. Frank joined IDC with over 15 years of experience focusing exclusively on the tax arena. His career in the insurance industry commenced with Canada Life, who he joined in 2005 as an estate and tax planning consultant at a national level. Frank's experience allows him to excel in the large case market, and his background allows him to effectively communicate and promote concepts to their clients, their accountants, and lawyers. Frank holds a CPA, CA, CFP, and TEP designations. Please welcome Frank Abate to share the real story. And we are going to do a little bit of a Q&A period. So maybe just before we start the Q&A period, Frank, do you have any comments? Just maybe a little bit about yourself.
Wow, you got me at a loss for words. I usually love to speak. Speaking about myself is tough because I'm shy when it comes to me. But personally speaking, love the industry that we're in. I love the industry that we're in, and I love what I do in the sense that we have an opportunity to advise families and make families better off after we've implemented our planning. So yeah, absolutely. That's where I'm at professionally in terms of my career. I love doing what I'm doing.
Well, it's been about 4 years since you joined IDC, and I guess one of the questions I have is, in thinking back over the last 4 years, is there any cases or any situations that maybe jump out at you over the last 4 years?
Yeah, there are. I have to start by saying how nervous I was. You and I went through our discussions way back 4 years ago, and if I wasn't nervous, I just wasn't. I'm a good poker player, to be honest. I just was nervous about the model. At the end of the day, this was a model where Frank is coming in as a resource, but if I'm going to get engaged with an advisor, there's a slight cost to the advisor. And what was going through my mind was, hey, at Canada Life, I was a free resource. And, you know, the carriers, most of them have a resource like a Frank Abate, a Chris Britton, or a Brad Hyde. So what was going through my mind was, what is it about what I'm going to be doing at IDC that's going to attract advisors to Frank versus the advisors going to the carrier personnel? And what I realized is that we're two separate models. So the carriers are providing their tax accountants, their lawyers, fantastic group of people, wherever you look, across the board, fantastic people, CAs and lawyers. But they're supporting a different type of a role than what we're doing here at IDC. We are becoming team members for that advisor. And really, it's a difference where we're engaging with that advisor as their team member, as opposed to that support person from a carrier perspective.
Frank, can you drill down a little bit and just maybe talk a little bit about the process from beginning to end with an advisor?
Absolutely. The one thing that happens over and over again is people ask me for, that precursor. Frank, what is it that I could send to my client before our first meeting? And that's a tough thing, because I'll come back to the individual, I'll come back to the advisor and say, hey, there's nothing that I want you to have filled out. If you've done a fact find, if you've spent time gathering facts, please, by all means, share them with me. But really, that process entails a first meeting where it's just an informal discussion. And that informal discussion starts with Frank saying, tell me about your business. Now, what business owner doesn't like to talk about their business? And, a lot of you might be saying, Frank, how does that relate to selling life insurance? It doesn't. But everything we can get about this individual's business by asking such an open-ended question will get us more facts and more important information about that client. So it's that discussion. Tell me about your business. And then, of course, what's important to me is coming out of there with important facts, but I also want to know the organizational structure. If that hasn't been shared, if it hasn't been created, we're going to draw it together on that call. And I also want financial statements. At the end of the day, financial statements for an accountant, that's like the Bible. I get so much information from financial statements. So really any advisor will tell you that that process, that first meeting is extremely open-ended.
In the last 2 years, we've been in the pandemic. How has that impacted your business and the way you work in that?
So the pandemic, it's interesting because that pandemic, that thing called COVID that we've all been facing over the past 2 years, it really changed my model, and it changed many people's, well, all of our models in terms of that face-to-face meeting is not happening. And I'll tell you, if I go back to March 2020, I was putting off cases. I was saying, no, there's no way we're going to do this WebEx thing, this Zoom thing. It's just not right to talk about $100,000 premium or $200,000 premium and do it over this type of interface. Well, fast forward, and I realized that this is the new way of meeting people. It's an efficient way of meeting people. Clients like it, and really, there's no issues about I don't want to talk to Frank over this type of a medium. So efficiency has become huge in using these types of ways of communication.
How do you interact with the clients' professionals, like their CPAs or their lawyers, for instance?
It's interesting. I'm just, in order to make that point, I'm going to go back to my process for a second, Greg, because that's going to tie in nicely. So what I left off is, of course, the start of my process is basically talking about that first meeting. So after we finish that first meeting, we get together again with the client. And here's where it relates back to CPA and lawyer and whoever it might be. But it's basically, second meeting is a deliverable. And that deliverable basically entails us walking through a PowerPoint where Frank and the advisor address the concerns and the issues that the client brought up in that first meeting. So once we go through that, and anybody that's worked with me knows that I make that very simple. It's a simple meeting where we're going through structure, we're going through how life insurance fits in to achieve estate planning goals. And then we finish that and we have a follow-up meeting, a third meeting. Well, at that point in time, I offer at any point in time, if your CA wants to be a part of this or you want to engage them, please bring them in. So it's interesting, Greg, not everybody wants their CAs to be a part of this. Now, I welcome it because at the end of the day, I don't want them to think that we're doing something that isn't kosher or isn't going to pass the snuff test from their accountant. But when it does come to time to meet with accountant, for those that want us to, not all do, then it becomes an issue of educating. Accountants do not know this industry as much as we think they do. So tax, estate planning, life insurance, that's an area that not all accountants are well versed in. So firstly, I'm there to educate that accountant that might not know our material very well. There's some that know it extremely well, but there's others that don't know it as well. And I'm there to collaborate. I'm there to tell them, hey, listen, Frank's an accountant who does not do accounting work anymore. So there's never that resistance from the accountant feeling that the advisor has brought in someone to steal their work. And a lot of times the accountant is very grateful for some of the things we bring up. We might bring up the suggestion to implement an estate freeze. We might bring up the suggestion to introduce a trust. And the accountants are going to get the work for implementing that. So I have to admit, Greg, most of the time, it's a collegial relationship. It's a collegial interaction. Of course, you're going to get, if I told everybody that there's not times where accountants could be disruptors, then people would not believe that. Of course, there's going to be times where accountants are disruptors in that process.
What sort of trends have you seen lately in the industry?
It's interesting. I think everybody on this call knows the acronym IFA.
Yep.
It's incredible how many IFA cases that are coming across my desk. And I'm going to classify them as two different IFA cases. There's the one that is client initiated, meaning that a client approaches our advisor and says, hey, I want to learn about this IFA. And IFA, I'm sorry, in case I just used the acronym, that's short form for immediate financing arrangement.
Right.
So when they're client driven, because the client saw something on the internet or Googled and found an IFA, and they just want to talk to us because of the concept, that worries me a little. That worries me because they're not really looking for the life insurance component of the IFA. At the end of the day, we sell life insurance. The IFA is a way to help people pay, to help people manage their cash flow for their insurance needs, but it's not something that we start with. So that group of people worry me somewhat. It's the group of people where, let's take real estate investors. I dealt with a lot of real estate investors last year. Well, those people I'm completely content with, because at the end of the day, our analysis might show that they need X amount of life insurance. Call it 2 million, 3 million, 5 million, 10 million, whatever that amount is. Yeah. And that insurance needs $100,000 of premium to fund. Well, I'm okay with that individual being introduced an IFA, because those people are okay with leverage. They need the life insurance policy. And then that is truly us fulfilling their need with a solution. So long-winded way of saying that the IFA is really on the radar right now.
Is there anything advisors should avoid doing when approaching a large case?
Greg, at the end of the day, that relationship between advisor and client, they manage that relationship, and I can only advise based on experience. And I think that the three individuals that you have across the country, we have a lot of experience. So when we're suggesting something, we're not suggesting it from any reason other than experience. And at the end of the day, what we're trying to suggest is, first of all, do not start a case by sending a concept piece. So when people ask me, Frank, can you send me a piece on a corporate estate transfer? I think that's the hook that will get us a meeting. I say, no, that's the hook that's going to end your ability to close here. Or Frank, can you run an illustration for me? And I say, how can we run an illustration when we haven't done the right job in terms of meeting this client and talking about their needs? We deal in a high net worth market. We're not selling them a product. We're not selling them a concept. We're listening to what they need, and then we're presenting to them what we think is right. Will it be one of the concepts? Absolutely, it'll be one of the concepts. But we're not leading with that concept. We're reacting with that concept after we've heard what it is that they need.
Frank, you mentioned a second ago about experience of the team. Between you and Chris and Brad, I calculate roughly 80 to 85 years of industry experience. So definitely the team has a lot of experience. And aside from casework, how else can the advisors use the team?
It's interesting, Greg. There's a lot of questions that come in, but they all revolve around a few main things. So transfers of ownership, that comes in all the time. And to start, obviously, it's that technical support. So you may not want to go to the carrier to ask the question. You might get a quicker answer from us internally. And transfers of ownership. I see at least one a week in terms of, hey, Frank, my client is transferring this policy from OpCo to HoldCo. What are the implications? Or Frank, we're transferring it out of the corp. So definitely a lot of questions on that. Questions on CDA calculation. Hey, Frank, I have a death benefit that's paid out. Can you help me on this? Can you give me some high level as to how this is going to flow through? Deductibility of premium. Frank, how does that work again? Can you give me a little bit of a background, or can you send me articles? A lot of times we'll send articles. Estate freeze. Can you send me an article on an estate freeze? And what I want to stress, Greg, is that we might not have the answer for everything. Although I might think at times that I know everything, I don't. And a lot of times you'll get a response from me saying, sorry, I don't know that, but here's where you should go for your answer. So at the end of the day, if you're not certain whether or not Frank, Brad, or Chris will answer it, send it to us. If we don't know the answer, we'll be honest and we'll direct you to the right place.
I guess looking back over the last 4 years, what is an important lesson that you've learned that you can share with advisors?
So I'm going to say something that every advisor is going to say, Frank, this is obvious, but in this high net worth market, especially, it's important to have patience. Right. And we got to step back, because when we're dealing with a high net worth case, and I keep referring to it as a high net worth case, so call it premiums of 25,000 up to whatever it might be, 100,000, 200,000. Well, when we're dealing with those types of cases, we're asking the individual to part with a substantial amount of capital. So we have to think that through. Call it 100,000 a year times 10 years, or 250,000 a year times 10 years. We're asking that individual to part with a couple $1 million, $1 million, whatever it might be. Right. That might not be as quick as that term 10 or term 20. It's not a snap of the fingers. So patience is important. I've got a case right now in underwriting that was open back in 2019 before the pandemic started. And finally, the individual came around in November of last year. I'm sure everyone on this call has examples that they have where it was patience that led them there. Keep it simple. Another one of my tips is keep it simple. Anybody that's dealt with me understands that I'm not the guy to make things complicated. I simplify, simplify, simplify. Just yesterday, I had a CA, and we were looking at some insurance in her professional corporation. And the comment was, you know what, Frank, this is clear. This makes sense. I've heard this concept, corporately owned insurance, but this makes a lot of sense. And we didn't look at one spreadsheet. Through the whole hour meeting where I gave my deliverable, we didn't look at one spreadsheet. I sent her all the spreadsheets for her review afterwards, but that hour meeting that I have with the client is about simplifying, conceptualizing, getting them to understand why they're committing so much premium to this cause.
So you're really looking for cases of 25,000 a year in premium or higher. Would that be fair?
Greg, I don't know how the other gentlemen work, but I never put a minimum. What I find is that typically the cases will start out at that minimum of $25,000 and work their way up from that. I think anything under 25,000, you're getting to amounts that probably are not warranting our needs or our services.
We are at our time limit, so again, on behalf of all of us at IDC and the advisors, thank you for your efforts. Really appreciate you spending the last 20 minutes with us. And again, Frank and Brad and Chris are available. Please don't hesitate in reaching out to them.